Have you ever seen a car dealership offer to lend you money directly? That is called in-house financing. Let us break down how it works. In-house financing means the seller acts as the lender. Instead of going to a bank, you make your monthly payments directly to the business. Because the dealer is the lender, they control the approval criteria. This often makes the process faster than traditional bank loans. The process is streamlined. You pick your item, fill out their application, and sign the contract right there at the point of sale. The main trade-off is speed versus cost. Banks usually offer lower rates, but in-house financing is often much easier to get approved for. Because the dealer takes on more risk, they often charge higher interest rates. Always compare the total cost of the loan before signing. Always look at the total cost of the item, including interest. A low monthly payment can sometimes hide a very expensive long-term loan. Thanks for watching. Understanding where your money comes from is the first step to smart shopping. Educational content, not financial advice.